Hey, what's up, family? My name is Brehon, and I'd like to welcome you guys back to the channel where we love to focus on financial and personal development. Family, I hope you guys are having a phenomenal day, and I hope your week is going awesome. Now, family, 65 to 70% of all trading is done by computers, right? So you have all these big wigs, these very, very smart people. They set up their computers, their infrastructure, their workstations to trade large equities, a large amount of equities based on certain algorithms. And oftentimes, when we understand that, when we see huge run ups in the market, when we see huge declines in the market, we can almost bet that when we have a huge run up in the market, we're going to reach a point or a period where we're going to be overbought, and it's going to be a slight reversal to the downside. When we have a huge decline in the market, we can almost guarantee that the algorithms are picking up oversold patterns, and they're going to start buying back into these equities, right? And so we know this and we understand that, and knowing and understanding this will help us position ourselves for success, right? And so last week, man, the chairman of the Fed came out. He didn't say anything too negative. He didn't say anything too bad about the potential decreasing of the future interest rates. And so the market had pretty much taken off, catapulted that day. Phenomenal day in the market. I think everyone made a whole lot of money on this day. I know I made I made a nice amount of money for one day of trading. But when we know markets go up, markets goes down. And so when we have a huge run up like this, you can all but guarantee what's going to happen. We're going to come down. We're going to have a reversal. Now, we don't know when the reversal will come, but we know within the coming days, we are going to have a slight pullback. Okay. And so we had a huge run up here. We opened at 395, hit a high of had a low of 393, hit a high of 407. Tremendous day, right? And so there was a little bit of momentum. And so what I did was actually I won this day. I bought in, had a great day here. And right before the close, the momentum was so strong. Right before the close, I purchased another call option right before the close. And when we opened up, we closed here at 407. We open here at 408.77. So right at the open, I immediately sold, right? Because we all know that it's going to be some momentum, but eventually after a huge run up, we will come back, right? We will come back. And so I caught a nice little profit there and I sold off, right? And then the following day, what happened? We closed at 407. Here we opened at 402. $5 difference, right? And so again, we had a huge run up. We know we're going to come back down some, but when we come down, there are going to be opportunities where we can make money when the stock goes up and down throughout the day. All right. And so right here, another great day. We opened at 402. I immediately placed a call option there because I was watching the previous couple of days, and that's almost a $5 difference. So I've kind of figured that we were going to come up a little bit throughout the day, and then I was going to sell and take my profits, and it did just that. All right. And so then the following day, right? This is a cycle that repeats itself over and over and over again. And the following day, let me see, this day we closed at 406. Here we opened at 403, and then we just had downward movement. And so again, after 30 minutes, I kind of start following the candlesticks, play some trades there, play some put options, made some money there. But ultimately, you don't have to do that. When we hit a nice run like here, if you want to set a put option 30 days out, or you want to buy SQQQ, and just you can ride this thing down while making some money on the downside. So you could trade options, or you can buy inverse stocks. So you can buy SH, or you could buy SQQQ. All right. And so, family, there's a multitude of opportunities where we can make money. And so as of right now, we had a huge down day. All right. So I'm going to tell you what I did. So we opened at 403. $3.95. We closed at $3.99. Good, $4 or $5 difference. So I immediately placed a call option right before the start of the day. And so I'm going to continue watching and seeing how things play out. If I'm not getting the push at the open, I'll close it. But if I do get a nice push, I'll continue holding this thing for at least a dollar increase. I'm looking at 10, 12, 15% profit and I'm out. All right, I'm looking for 15% profit and I'm out. If not, I'll immediately sell and I'll look for put options because I know it's coming back down to the 20 SMA. I just don't know when, but I know we will come back to that 20 SMA. And sometime during the day, I hope we go up a little bit so I can sell, then we can come back down. And then what we're going to do is we're going to wait and see what happens once it hits this 20 SMA. Will it sit here and propel off the 20 SMA or will it fall through the 20 SMA to new lows? All right, now family, I hope that added a little bit of value to you. Now, if it did, hit that like, subscribe, and keep coming back for more wealth building information. Peace.